So we want to wrap up, as we always do, with a couple of questions. The first one is a wait, but why is this the way that this is question? So Kiah, I think you have one of these for me today.
Yeah. So Alex, why is it that central banks have so many different and arguably conflicting jobs or roles and responsibilities?
Oh, Kiah, I'm so glad you asked me this question. So this
I know that you're a big
from...
fan of central banks. So
I love central banks. You know how I do. So you had sent me an article, a paper a while ago that was entitled Structural Conflicts in Central Banking, Regulator or Operator of a Payment System, which was by Aaron Klein at the Brookings Institute. And it was just such a well-written title, honestly, because it hit at something that I've been, really kind of bothered by for a while, which is, in my non-fintech circles, when people ask me like questions about different things in financial services, one of the questions I sometimes get, particularly when interest rates were going up really quickly, was like, what does the Fed do? And I like had to like grab the person and sit them down and be like, all right, I need like a good 25 minutes here. You got to just like pay attention, give me 25 solid minutes, because they actually do a whole bunch of different things. They regulate bank holding companies, as we've been talking about. They manage monetary policy, which is what you have been seeing happen and what everyone's been talking about. And they also operate a payment system. And if you'd like to learn more, listen to my podcast where we interviewed the head of the Federal Reserve Payment System. So like they have all of these different roles. And I do think it is a really weird sort of collection of different jobs that sometimes maybe do sort of intersect with each other in ways that aren't great. And, I always like to sort of imagine the alternate universe where like, imagine if the Fed ran its payments infrastructure like the mob, where they're like, hey, nice private market payments network you have there, clearinghouse. Be a shame if anything happened to it, right? Like, we sort of rely in some ways more on like norms around the way that these different central banks operate and sort of our expectations around what they're going to do, right?
That's like why the Fed is a payment operator, right? Because of the norms that was set up with like, interstate banking and before like electronic payments, was the Fed needed to kind of clear payments of banks in its regions, right? Yeah, it's like totally norm-based. Yeah, no. And so it's just like we have, it kind of goes back to what you were saying before about we have the system more because of history than like it makes sense. But yeah, like these various roles of the central bank, and you see this in other countries too, it is just very, very strange. And I think it does create these conflicts. And we've talked about this on the show before too, right? Like you have these sort of new-ish state-level banks that convince, like a crypto company in Wyoming gets a new special crypto bank charter, right? Which is totally bizarre. But then they go to the Federal Reserve and they're like, well, I'm a bank. I'd like to get access to, the Federal Reserve payment system. And the Federal Reserve is like, yeah. And it's like, why are they restricting access to that? And how much does that have to do with the interests of the bank holding companies that they also happen to regulate over here? And I mean, I don't know if I buy into all of the conspiracy theories about, I certainly don't buy into the really wacky ones about the central bank, but even like the more mild, like conflict of interest-y type ones, I don't know how much truth there is actually to that, but they open themselves up to all of these discussions by having all these same jobs under one roof. It's weird. Well, I think Aaron, I can't remember when he wrote that paper, but the Fed also was one of the primary regulators of several of the banks that failed. And so he was talking about, whether it's appropriate that the Fed, which has so many important jobs, the Fed's like too big to be failing, right? Interest rate policy. And they write a bunch of rules, and they're an examiner, and they're a regulator of the payment system, and they're an operator of the payment system. And that the Fed has this supervision role and like oversees really big banks, and some of those banks failed this year. And that like that's just something that's really interesting too, is that I don't think like there's people wearing too many hats at the Fed, but it's almost like it has too many mandates and it's trying to be all of the things And I think that can be really confusing. And also, I think it's, we've talked a little about the master accounts, right? The Fed runs this system, runs the payment system that you need the master account for, but also they get to decide who gets a master account. And then it's not like a clear process. The list that they put out leaves a lot to be desired, because the number one way to get a master account is to be a bank. And then it's like, okay, but are there any not banks? And they're like, maybe.
A couple, yeah, maybe, yeah.
Yeah. And there are non-banks. And so why did those get master accounts, and under what rationale? And so it is really interesting, because it's like kind of like it's like, I don't know, it's kind of like the Supreme Court, right? Like no one can check the Fed. The Fed's kind of the final say on a lot of stuff, including, monetary policy, including regulation, including the master accounts and the payment system. And so
well, to your point, I mean, there's a nice thing about division of labor within the regulatory sort of apparatus, right? Because I'll give you an example of what I'm talking about. I've been spending a lot of time on like things that the CFPB is working on right now, right? So like open banking as an example. And like open banking, I just read all the comment letters that were submitted on the proposed rule for 1033. Yeah, I read every one of the 11,000, Kiah. Don't question me on that. I promise I did. Like, don't poke at that claim at all. And no, in the ones that I actually did read, one of the things that came up, particularly from like the bank perspective, was the banks referenced their prudential regulators a lot, right? And they were like, hey, if we had this rule the way it's written right now, this would bring us into conflict with things that the FDIC or the OCC or the Fed want us to do or require us to do. We would like you guys to like work this out. And I get that that's annoying, right, to banks to have like two different sets of regulators, one that's focused on consumer protection, one that's focused on prudential matters. And like sometimes their rules or their guidance comes into conflict. But at the same time, I also think it's really healthy for our regulatory system to have those conflicting objectives that have to kind of get worked out over time. I mean, imagine the alternate where all consumer protection regulation falls underneath the same prudential regulators, right? Because I think that
might be how it is in other countries, though, right?
I think it probably is. No, I think it is. But like, I would worry about like that from a consumer protection perspective, because I think that would make it so much easier for, using open banking as an example, for banks to go, let's just say like the OCC was in charge of open banking and all sort of consumer protection. It fell under the OCC. I don't know that I want the OCC having to weigh by itself the argument for its prudential regulations and the requirements it has around those, like third-party risk management, and the consumer benefits of open banking. Because when the banks go, hey, we'd love to do this, but it would make us a lot more, difficult to manage third-party risk and might put the financial system at jeopardy, like that would be an argument that would be much more persuasive to the OCC under that sort of hypothetical than it is to the CFPB, who's like, look, I get it, and we'll try to sort of work with the OCC, and we'll try to like make these regulatory requirements harmonize with each other. But at the end of the day, we're not going to let you sort of get away with just saying this is bad because of this other thing. So I don't know. I think there is a benefit to jobs being separated by different agencies and a little bit of interagency conflict. And the Fed is the example of when you don't have that. Like they just do a bunch of different stuff and you're never quite sure why they're doing what they're doing. And, even we talked about on one of our previous podcasts last year, we talked about the change to the way that the Durbin Amendment is being applied to interchange caps, right?